Risk mitigation, I look at that as a fancy term for insurance, but it's a lot more than that, right? We're talking about how do we protect ourselves in different situations for things that might happen. So today we're going to explore the top 5 strategies for financial risk mitigation. So number one, what we want to get into when we're thinking about mitigating our risk is, let's start with due diligence, right? How much have you explored on the investment you might be looking into, the house you may be wanting to buy, the contracts that you're looking to sign? Are you doing your proper due diligence to make sure that any financial pitfalls that could come up or things that might be unexpected in your mind, right, that you've addressed that, you've looked at that, and you understand what it is that you're getting involved with? Due diligence is one of those things that can create the difference between getting into something that you're stuck with, that you're not happy about, or actually understanding what you're getting and knowing that this is the right direction for you to be going in financially. So number 2, from a financial perspective, is what I would be thinking about is creating an emergency fund. I always think about, you have a car, the car breaks down, you have to go to the mechanics and get it fixed, right? And depending on the cost of that, you might not have that money sitting in the bank, and what happens in that case, right? Well, now we're putting it on a credit card and putting ourselves potentially in more debt than we want to be in, or in debt at all, right? And the problem is, if we had just saved some money for a rainy day, having that emergency fund set aside, that could help us from getting into debt. So now that you've done your due diligence and you have an emergency plan that you're setting up, you want to take a look at what are the risks inside of your plan, right? You have this plan, maybe it's a financial plan for your life. What are the risks that are popping out there that really need to be addressed? In the risk mitigation strategies, we want to review what those risks are, how likely they are to happen, and what's the order of importance, so that we can properly cover those risks and have the right emergency fund set up to make sure that we're taking care of those.
Hey, what's up everybody? It's Rob Gill in the Money Minute, and we're going to talk about the top mitigation strategies, and I want to wake you up during this video. Get with the right team. The way you mitigate strategies is to make sure the right hand is talking to the left hand. If all your professionals are tied together for your best interest, for your greater good, based on your goals and objectives, guess what? You'll be able to mitigate any kind of risk out there. Back to Ed.
And in the 4th strategy, we want to, where it's appropriate, use insurance and turn to the insurance companies to cover those risks, right? These are low frequency, high impact events that we just don't have the funds to take care of. Think of, an automobile accident, right? You crash your car, do you have 30 grand in the bank to just go and buy another car? Or is that something you might want to pay the insurance company $1,000, $2,000, whatever your insurance policy costs per year to cover that event, right? Same thing with a house. We insure our house because if that burns down, do we have the money to just go and buy a new house or build a new house? No, likely not. So that's where insurance can play a key role in your risk mitigation strategies. And that's just on the personal level. On a business level, it's even more involved. For business, you may want to look at protecting against loss, cybersecurity. There's all different things that are coming up today that are so vitally important in protecting your business. So from a risk mitigation standpoint, those high impact, low frequency events, those are the ones we want to turn to the insurance company and say, hey, you guys take this risk on. And the 5th strategy that I'd like to share today is the idea of diversifying your income, right? From your perspective, if you have a job today and that's your only source of income, what happens if that business goes out of business? What happens if you get laid off or downsized, technology changes, right? So from a risk mitigation standpoint, you want to diversify your income. have multiple streams of income. I've been told that the wealthy have 7 different streams of income. Why do they have those streams of income? Because that's what's helping them mitigate any risk, right? When their business models change, things happen or impacts in the economy, they have other avenues that continue to create money for them. So if you're diversifying your income streams, that's going to help mitigate any future risk that may come down the road to protect your income. So hopefully you're subscribing to our content and you're seeing new videos that come out every day. If you haven't yet, please hit the subscribe button and hit the notification bell. That way you get an email alert every time we put out a new video, which is like 9 a.m. Eastern, Monday through Friday. And if you're liking this video, please like this video.